been covering about the different trading strategies that are very good for beginners, for intermediate traders. We have been exploring those different trading strategies. Also, I've been talking about risk management and how the best way to approach this forex market. So for today, I just want to answer all the questions that you may have in regards to the market, as well as also do a small introduction to you that is out there that is very new in this forex market, and maybe you're wondering how on where to start your trading journey. Now, I'm here to guide you because huku hivi nje watu wanagongwa because people get exposed because they have know that that's verifiable information that can be able to get them in this market. So for today, I just be doing a small introduction, as well as I just want to encourage you to ask all the questions that you may have. So I'll be able to address all the questions. Now, let's start from the beginning. This word forex. Anytime you hear somebody say that is a forex trader, what does that person really mean? So, what does that, when you hear somebody say that is a forex trader, what does that person really mean? So, and now today, I wanted us to start from this word forex. And forex, this one is usually a short form of foreign exchange. Basically, forex is foreign and it is exchanged. Okay. Now, forex is a short form of the word foreign exchange, and it is the buying and selling of currencies in a foreign exchange market. You see, this forex market, is the largest financial market in the world. It is so big, so that it is bigger than the stock market and the crypto market combined. That's how big this forex market is. And more than $7 trillion are traded each and every day. You see, now that presents a very good opportunity for you out there to be able to trade in the forex market. Also, if you're already working and maybe you would like to add another skill, one of the skills that I would like to encourage you to consider is this forex market. Okay. Now, I'm going to be answering those simple questions that people usually ask, especially when it comes to this forex market. Now, there are various reasons why people prefer this forex market over any other market, and each and every person that you have met out there are various, maybe each and every forex trader that maybe I've met out there are various reasons why that trader decided to trade in this forex market. Decided to choose this forex market over the stock market, right? Now, for me, the reason why I joined this forex market is the flexibility and the freedom that this forex market offered to me once I mastered it. You see, I'm already telling you that this forex trading is a skill like any other. I'm not coming here to tell you that when you start trading, like the next 1 month, the next 3 months, you'll be making profit, or you'll be making a lot of profit. No. This trading is a skill like any other. It requires time. It requires your time. It requires your patience, and it requires a lot of practice for you to be able to master it. But here's the thing: once you master it, there is nothing that can pay you more than this forex trading. So that's why I usually tell people, anytime you're approaching this forex market, approach it with that mentality of a skill. You see, also, if you want to run driving, you don't just start by driving on the highways. You usually go like in a driving school. You learn the basics. You learn about the basics, about the traffic rules, about everything, the basics. And then you start practicing on the roads. You start doing those small practicals that helps you to gain the confidence. It helps you to gain the experience. And then after you have had that confidence about not driving, you can easily now cruise on these roads easily. Now, that's the same approach when it comes to trading. And most of the time, when people...
Have you had all the forex hype online? Flashy cars, false profits? Here, we are not about the hype. We are about the skill. Our training is real, practical, and beginner-friendly. We will train you how to analyze the market, risk management, and also how to grow your account step by step. You can visit us at Spar Mall, 2nd floor, S47, or give us a call on our number, which is in all our social media platforms, to book your slot and start your journey to financial freedom.
When the people are beginning their trading journey, they want to jump the process. They want to jump the process. They want to jump those steps that are usually there for you to be able to master this market. Unapata mtu amekaa amejua what is forex, hata hajajua about the trading, hajajua about the market analysis, hajajua about the trading platform, and he already wants to make that amount. Now, That is usually that is usually like the wrong approach when it comes to this market, this trading the market, because once you approach the trading like that, you have already approached it the wrong way. And you see, once you approach something the wrong way, it becomes even way wronger for you to be able to understand. But there is a simple and a very simple, there is a very simplified way in which you as a forex, in which you as an aspiring forex trader, you can be able to accelerate your learning when it comes to trading. Now, one of the things is that you need to know about you need to learn about the basics. You need to, when it comes to trading, first of all, you need to understand the basics. Learn what is forex, what is trading in the forex market, learn about like the market analysis, familiarize yourself with the trading platform. That is really like the small introduction. Okay. Now the next thing, now after you've learned the basics, now you need now to open an account with a forex broker. Okay. And when you open an account with a forex broker, before when you open an account with a forex broker, now the next thing now before you start now trading is that you need to open a demo account. This is one of the things that most of the people usually jump. Unapata someone has just learned the basics. He has not even practiced the trading strategies on the live account. He has not practiced the trading strategies, and you want to jump into trading live account. Now that one is usually the wrong way. So learn the basics. This one is usually my simplest way I can advise you. The first thing is that learn the basics. The next thing, now open account with forex broker. The next step now is usually develop identify trading strategy. You need a trading strategy to help you to be able to maneuver this market. Now, trading strategy is usually like very simple. Okay, you can develop your own trading strategy by basically looking at this forex chart and maybe identifying a repetitive pattern that is occurring in the market. Because the secret about this market is that this market is usually like very repetitive. What happened last year is likely to happen this year. What happened last month is likely to happen this month. What happened even yesterday is likely to happen today. So you can be able to identify those trading strategies. You can be able to identify those trading patterns, and maximize on them, or already use strategies that are already out there. We have different trading strategies. We just basically need to identify a trading strategy that resonates with you. Now, once you have developed or you have identified a trading strategy, the next step yenye naambianga watu ni practice it on a demo. Okay, before you jump into trading this trading strategy on a live account, it is important you first test it. And how you can be able to test it is you test it on a demo account. A forex broker is the one that is going to offer you a demo account and a live account. So start with a demo account. The reason why I insist on a demo account is that they don't really be able to know what is working, what is not working, the effectiveness of a trading strategy if you have already practiced it on a demo. Also demo, it helps you to have that confidence that you need to trade in the right account. Okay, so practicing it on a demo is usually one of those steps that I usually tell people. And when I tell people practice that trading strategy on a demo, the minimum I can encourage you is 3 to 6 months. That's like the minimum I can encourage you to trade when it comes to trading on a demo account. So anytime you are practicing on a demo, kindly take 3 to 6 months. Now, most of the people you find that when they are starting their trading journey, they want to practice on a demo within 1 month and they jump into live account. Now, that's one of the mistakes most people usually do. Because trading yourself is a skill like any other. Kindly take your time to master it. Take your time to master it. Learn about the trading edge of that trading strategy so that now you can be able to practice it on a demo. Now, the next step is usually now learn about risk management. Now, I cannot overemphasize this enough. Okay, before you jump to trade in a live account, kindly have risk management techniques and strategies in place. Basically have some techniques that you can use to protect your capital. Now, there are various techniques that you can use to protect your capital, like using the right position size or using the right lot size. Before anytime, when you talk about this risk management, When you talk about this risk management, before now tuendelee, when you talk about this risk management, I'm basically meaning have techniques and strategies to protect your capital. As a trader, when you deposit like, assuming maybe you want to deposit like $1,000, right? Ama you want to deposit like $500 for your trading. The first thing you should ask yourself is that how much would I be risking in a single trade? That like should be the most basic question. How much would I be risking in a single trade? Assuming you have decided in this $500, I want to be risking like $10 per trade. Now the next thing now, after now, you have decided that you want to be risking like $10 per trade is now, the next question should be now, what is the right lot size that I be using so that anytime I trade, I don't need to be risking this $10. The best thing, we have an app called position size calculator, and that position size calculator, it can help you to know the right lot size. After now you have known how much you're going to risk the position size. The next thing now should be where are you going to put your stop loss as well as where you're going to put your take profit. Now there are some traders who usually say that no risk, no Ferrari. So unapata they are over risking their account. But the truth is this one is one of the most crucial aspect of trading. And if you're able to risk, if you're able to manage risk, trust you me, the opportunities out there are so good. When I was starting out my trading, first of all, I never had someone that was getting me in this market. Secondly, I used to be a high risk type of trader. Like if I deposited like $50, my target was to double it in a day. And I used to think that like that's like the best approach when it comes to trading. But the truth is this, okay? That is not something you can go to do consistently. Remember, trading, you need to have that like that consistency. So if you want to acquire that consistency when it comes to trading, you need now to have risk management parameters in place. So each and every trade you take, ensure you have put a stop loss and a take profit. If you are very new and you don't know where to put a stop loss and take profit, the strategies that you'll be using will show you where to put your stop loss and your take profit. Now, after now you have learned about risk management. Now, you also now need now to start. Now you need now to transition to live trading. Now, when it comes to live trading, people now this is now where people usually ask is that how much should I start to trade? So, how much should I deposit to start trading? Okay. Now, this question varies because people have different interests and have different ambitions. Though, if you are very new in trading, I would recommend that always start small. So, deposit like maybe $30 or $50. You can deposit $30 or $50 in your trading account and then see whether you're able to grow this account. Okay. If you're able to grow the $30, the $50, or $100 consistently, at least now you can be able now to increase your trading, to increase the amount that you're trading. Now, me, I remember the first time I started my trading, I deposited $200, and trust you me, within a very short period of time, I'd lost it. That because, first of all, I've not been able to practice a lot. I've not practiced a lot in my risk management, and secondly, my mindset was totally different from professional traders. My mindset was I wanted to double this $200 in a day. Okay, so in when you are like trading, you have to have like your own set rules. Why will you be entering that particular trade? And now starting small. This one is one of the magic that people don't usually know. Because also another thing you should note about live trading is that in a demo account, when you are talking about this demo account, your emotions are not really tested in a demo account. Emotions, you see, when you be trading sometimes can be very emotional. You'll be dealing with fear, you'll be dealing with fear, anxiety, overconfidence, sometimes over trading, and you need to have emotional control because anytime you trade outside, anytime you let your emotions make your trading decision, you stand to lose money in trading. So when it comes to trading, that's why I'm telling people when you transition to a lead account, start with a small amount. Start with like $30. Now that these $30, $50, or $100, the one that first of all it should be amount that you are willing to lose. Okay. Now this now in kitu ingine yenye watu waambiangi huku hivi when you are trading, anytime you are putting the amount when it comes to trading, always put amount that you are willing to lose. Okay. This is the logic behind it. If you put money that you are not willing to lose, ama pesa yenye tuseme umeenda umechukua pesa ya chama, trust you me, you'll be trading when you're having fear. So when you see the right opportunities, you will hesitate to take those particular trades. And also, if you take a trade and maybe it goes just a small number of pips in your favor, most probably you will close that particular trade. So when it comes to live trading, start with just small account. Also, remember, when it comes to live trade, when you are trading on a demo, the emotions were not tested. So, your psychology, what you call your trading psychology, your mindset was not actually tested in a demo account. If you have ever traded in a demo account, you'll understand me when I say that. You'll understand me when I say that when you're trading a demo, it's easy for you maybe to take a trade, it goes against you, and then you close that trade, right? Okay, and then you take another trade and take double the lot size, if that trade goes in your favor, you start even feeling good. So now in live account, you have not that luxury. You don't have that luxury of like opening like trades with bigger position size, right? So what I mean is that when you're taking this live account, always start small. Start with amounts that you're willing to risk, and then now make sure that your risk management is in place. And once you're able now to see that maybe this $30, this $50 that you have deposited, you are able to grow it consistently. Now you can even now transition to put in more money. The other thing is that now, like the other thing about when it comes to like trading, it will give you that experience, it will give you that confidence. And the best thing about trading, like right now, we have these companies that we call the pro firms. These are companies that are funding traders, and they can fund you from $5,000 to $200,000. You just need to prove yourself that you are a very good trader and you have mastered risk management. You see, so for you to be able even to trade those positions, those pro forma accounts, you need to have this. You need to have passed all these stages. Okay, and once now you are able to grow this account consistently, I would recommend you to focus on pro forma account. This pro forma account, you can use them now to fund your account, because for these accounts they are very simple. If you are very good at risk management, they can really change your life in a very short period of time. I don't know if you have any question. Okay, let me first of all answer some of these questions. So how much wallet do you recommend? So for that matter that is asking, it's basically about the amount that you can start. Start with, I've just recommended 30, 50, or 100 amount that you're willing to risk. There's also the amount that is asking me about Forex brokers, or which Forex brokers do I recommend. Now, before I give you those Forex brokers that I do recommend, this is it. Okay. There are various factors you need to consider anytime you are opening an account with a Forex broker. Okay. We have tens and hundreds of Forex brokers out there, and maybe choosing which is the right broker for you might 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 not be easy for you. So these are some of the things that you need first of all to consider. If you open an account with a Forex broker, the first thing you need to look at is regulatory compliance. Is that broker well regulated? Okay, is that broker, like in the country, like here in Kenya, CMA, Capital Market Authority, is one that is authorized to regulate Forex brokers. So you can go and check, is that broker regulated by CMA? Now, this is the hack. Even though that broker is claiming to be regulated by CMA, look at the other jurisdiction that broker is being regulated. Like if you choose a Forex broker that is regulated in somewhere like the Australia, the European countries like the UK or the US, those are usually like the best regulatory authorities out here. So anytime ukifungua account of Forex broker, make sure is well regulated. So, because also you want to ensure that you are having that integrity of your trading experience, as well as your capital is safe. So, you don't want maybe you may deposit pesa and then the next day your broker yuko ama that broker ameenda bankrupt, and then now you have lost your capital. The other thing that you should consider is the quality of customer service. You need to choose a Forex broker who will be responsive to your queries. In case maybe you have deposit problem, you have withdrawal problem, you can easily be able to access that broker. The best thing, most of the brokers have 24-hour customer service. The other thing that you should consider if you open an account with a Forex broker is his mode of deposit and withdraw. Like here in the country in Kenya, M-Pesa is the most convenient way of transacting. So you can choose a Forex broker who has like M-Pesa as a mode of deposit and withdraw. The other thing that you can look at is the spread as well as the trading platform that that broker is offering. Okay, different brokers offer different trading platforms, and these are the most common trading platforms in the market. Ya kwanza ni MetaTrader. So when you talk about trading platforms, the first one is MetaTrader 4. The other one is MetaTrader 5. We have another trading platform we call CTrader. We have another one we call TradingView. Now, this TradingView, this one is the most advanced trading platform in the market. Okay. Also, when you're talking about also like Forex brokers, like Pro Farm Trading, we have like Match Trader, Trading Locker. Those are also other trading platforms. Now, this is the trick. If you know to use any of these one, these other trading platform, it becomes easier to know them. So, if you are very new in trading, I would recommend start with MetaTrader 5, because MetaTrader 4, maybe this year, they had said that sometime next year, this might be phased out. So you can just first of all choose MetaTrader 5. Now, which are the brokers do I recommend? Now, the brokers that I do recommend, I have no particular order. One of them that I do recommend is FP Market. FP Market. This is one of the brokers that I do recommend. He has the M-Pesa, he has this mode of deposit and withdraw. Another broker that I do recommend is IC Market. We have Paperstone. We have Xness. We have Hot Forex. And I can also recommend Windsor Broker. These are some of the brokers that I can recommend. This one is not a paid advertisement that I should like mislead you. All these Forex brokers, we find that they are meeting all those factors that you need to consider anytime you're opening an account with a Forex broker. Okay. Now, someone is asking which programs is good. So we have different programs that I can also recommend, and I'm also recommending because I have an account with them. Now, the first one that I can recommend when you talk about programs, when you talk about programs, the first one that I would recommend is FTMO. This one is the oldest pro farm in the world. This was the first pro farm in the world. Also, they are very good because they have never even denied people's payout. The other one that I can recommend is Funding Pips. We have Funded Next. We have Fivers. These one are some of the. So the reason why I'm recommending these ones is because I have had accounts with them. I think the other one that I recommended was Equity Edge. But as for the Equity Edge, they are very good because they are very cheap. If you are out there and maybe you have never even traded a pro farm account, Equity Edge, Equity Edge, they are relatively very good, and also they are very cheap. They are the cheapest in the market. You can just go and try and see. But the best one, my best four are these one: FTMO, Funding Pips, Funded Next, and Fivers. Or someone is asking about SBS. Yes, I have used SBS, but it has been a very long time. So that one I cannot, since it's not among the one that I usually use most frequently, I cannot talk most about them. Yeah. So there is someone that had asked what really drives these markets. There's someone that had asked what really drives this forex market. Okay. Now, this forex market, for the forex market to be able to move, for there to be changes in prices, various things usually move the forex market. One of them is forces of demand and supply. Demand and supply is one of those factors that really moves the market. As you all know, forces of demand and supply move the market all over the world. If the demand of something is higher than the supply, the price will always go up. If the supply of something is higher than the demand, the price will always go downward. So when it comes to this forex market, demand and supply is one of the things that moves the market. Another thing that moves the market is economic indicators. Now, economic indicators such as like the GDP, economic indicators such as the GDP, the CPI, usually move this forex market a lot. Okay, so these ones, anytime they are released, they are some of the things that can move the market a lot. Another thing that really usually moves the market is interest rates. Various factors. Oh, the actions of the central bank, maybe to increase the action of the central bank to increase interest rates or decrease interest rates can move the market. Because if the central bank increases the interest rates over if the central bank increases the interest rates, it will attract foreign direct investment. And if it decreases the interest rate, it will the investors won't be that excited to come and invest in that particular country. Another thing that usually moves the market is international relations. How currencies relate with each other really affect the value of a country's currencies. Like if our country, if we have, if our country, we are having good relation with neighbors, our currency is most likely to strengthen. If you're having something like the wars, if maybe you are calling with our neighboring countries, and you're having like wars, our currency will depreciate. So these are some of the things that usually move the market. Also, I think there are others that I'm forgetting, but these are some of the things that really move this forex market. Oh, actually, I do recommend XM. I do recommend XM as a forex broker. For that person that is asking about Deriv is not a forex market. Today, we are talking about the forex market. Deriv is a synthetic market. Basically, for the Deriv, it basically derives its value. It's a synthetic market, and it derives its value from the forex market. So, for the Deriv, those assets that you are trading there, they are not like the real market. They are not like the real asset. They are basically computer generated. Yeah. Someone is asking, which platform accept buy through global pay? You can all of them they do accept through global pay. I've used them. For that one, someone that is asking about equity edge, yes, I have had my withdrawals with them, but I'm very reserved with them because they have some hidden rules. Especially if you are trading those instant funded, they have some hidden rules. If you are not very careful, they can easily deny you your payments. Yeah, I do recommend HFM, Hot Forex Market. I do recommend it. Now we are basically looking at the introduction about the forex market. So we have talked about what is in the forex market. Now let us look at market analysis. Which are the very common ways of you can be able to trade in the forex market. Now, any trader that you meet out there, okay, we analyze the market in three ways. One of them is what we call fundamental analysis. The other one is what we call technical analysis. And the last way of analyzing is what we call sentimental analysis. These are the most common ways in which traders usually analyze the forex market. Now, this fundamental analysis is also what we call news trading. So, for traders that are analyzing the market using this news trading, they are basically what happens in the market is that there are various news and economic data released each and every day. And this news and economic data usually basically gives us a glimpse of how the economy is faring. Okay. Now, for traders that analyze the market that want to take this news, they basically want to take advantage of how the price usually reacts when these news are being released. Because in the market, what happens is that when these news are being released, the market reacts by having sudden price fluctuation. Price inaweza imepanda like within a very short, within like 1 minute to 5 minutes, it has moved significantly. So for these traders that analyze the market using this fundamental analysis, they go and look at the economic data that was there, and then now they can be able to predict future price direction. Now this one is one of the ways in which traders do finance.